What a morning, what a weekend. This is your market update for Monday, March 13th. And as I'm sure you all have seen by this time, it started last week. We mentioned it last week, the collapse of Silicon Valley Bank, which kind of started Thursday afternoon. And then, of course, we had Signature Bank that was shuttered by the FDIC yesterday over the weekend. I believe that there are 2 or 3 more banks that are currently on the watch list as well. It's important to note, I don't believe that this is a widespread issue among financial institutions. I think it has a lot to do with a lot of different variables, but I think one of the major variables has to do with the way that these banks were structured as far as who their depositors were, who they were actively lending money to. I think a lot of that had to do with startups and venture capitalists, things of that nature. Of course, the Fed, increasing the Fed funds rate at such a rampant pace over the course of the last several months didn't help a whole lot either. I think eventually when you have a large spread quantitative easing program in place like we did during COVID, and then all of a sudden it's like, boom, you start increasing the interest rates, rampant, something's going to break. And I think that that's what we're ultimately seeing here. Of course, the markets, are spooked at this point in time. And what we've seen is investors moving money from stocks into safe haven investments, and mortgage-backed securities are safe haven investments. So stock market today, futures had indicated that I think the Dow was going to open down over 200 points. It didn't open quite that bad. I think it was down 197 points at the open. S&P 500 and NASDAQ both down on the day as well. Currently off of their worst levels of the day. The Dow is only down 123 points, NASDAQ 116. S&P 500 down 40. Mortgage-backed securities have been the beneficiary of what's going on. We had some pricing improvement the last 2 days of last week, although Friday we did see some deterioration in pricing in the afternoon. Mortgage-backed securities closed well off of their best levels of the day on Friday, closed up 23 basis points. This morning, opened up 86 basis points, and at one point in time were up well over 100 basis points, currently off their best levels of the day. Trading between basically support and resistance. Right now, mortgage-backed securities have moved up above the 100-day moving average, but are kind of stuck in between that and the 50-day moving average. So, the 50-day is serving as resistance, the 100-day moving average serving as support. It did break through the 50-day, but came back down. And again, it keeps hitting that resistance level. So I'm not sure, if we'll get above that level and stay above that level today. But currently, mortgage-backed securities are up 92 basis points on the day. So we'll see what happens. There's a lot of information coming out this week. Inflation reports. The CPI report comes out tomorrow. Remember that's a key report for inflation on the consumer level. The PPI report comes out on Wednesday. That's the inflation on a wholesale level. We also have retail sales numbers coming out on Wednesday to show what the consumer spending habits are right now. And then initial jobless claims come out on Thursday. Those are the unemployment claims filed for the first time as of last week. So we'll wait and see what happens. If you remember from last week, the initial jobless claims for the week prior actually ticked up above 200,000 for the first time, I think, since the beginning of January. So it could be that we're starting to see the impact of some of the layoffs, especially in the tech sector, that are starting to impact those numbers. Anyways, a lot has been going on over the course of the last several days. I think that there's a lot more to come this week. A lot of it looks to be favorable for mortgage-backed securities and interest rate pricing. So we will wait and see what happens. We'll keep you updated, and I hope you have a great afternoon.